Cameron Brandt, Director of Research at EPFR Global, is joining in to talk about the direction of money and where it seems to be going. Cameron, good to have you in. Even last time when we were speaking, you were telling us that some of the other emerging markets like China, South Korea, they've been attracting a fair share of dollars. Tell us what's the latest flows data pointing out? How are EM funds overall doing, and India dedicated funds? Any noticeable, change or reversal?
So the headline number is fair, but not particularly stellar for emerging markets equity funds. Inflows have been fairly consistent, but they've not been hitting peaks that we've seen certainly last year. That said, the interest is broadening, and that includes India. This past week, dedicated India funds posted their first inflow after 5 weeks of outflows. And there's certainly a lot of talk about emerging markets and the value they offer. And we've seen very steady flows now into the diversified global emerging market funds, which are usually the precursor for liftoff, but it still hasn't quite happened yet.
So that's good news. I mean, you're saying that there's some reversal. After 5 weeks, India-dedicated funds are also pulling in the money. What about China? Because when we speak to a lot of fund managers, there seems to be a fair amount of interest, global interest in Chinese markets as well. So what's happening there? And any other, key shifts? What about U.S. flows? They continue to be fairly robust because the market's been hitting newer highs on almost a daily basis.
Right. So starting with China, we're starting to see flows return there, but not exceptional. People aren't jumping in with both feet, at least not yet. What we have seen is a definite sort of reversal of flows to the previously quite popular GEMX China fund group, one that was growing quite aggressively last year. And is still adding new funds, but not seeing much fresh money. U.S. equity funds, in some ways, parallel China. They're seeing, okay amounts of fresh money, but it's not what you might expect given the stellar rebound of the major indexes through this summer. We did see, since I last talked to you, a hiatus in the rotation to Europe story, though flows turned positive again this week. But there's definitely some investor anxiety that the fiscal stimulus, driven in part by the need to rearm that they were penciling in for Europe, is threatened by both the possibility of a ceasefire in the Ukraine and that markets may start to impose fiscal discipline through bond yields.
It's a pretty poor line, technical issue there. Cameron, we leave it there for now. Thank you very much for joining us. And we hope to talk to you on a better line and maybe with better news in terms of flows as well. Appreciate your time here on CNBC-TV18. Let me just quickly run you through the interactions which are lined up here on the program. 8:35, we have the management of City Union Bank to talk to us about their FY26 outlook. 9 o'clock, Hiten Mistry of Equitas will join us on the impact of GST reforms on the FMCG space. Sridhi Bhattacharya will be with us at 9:20. He's a market master of the day. 9:35, the management of Bata India. Footwear stocks all rallied yesterday sharply. VMart will be speaking with us. Again, another space where perhaps at the mass level there is a big impact, big delta. We spoke with him, by the way, going into the GST meeting. And of course, in our special segment, Indianomics, Lata will be in conversation with Neelkant Mishra and Ashish Gupta on macros markets and how they stack up after the GST cut.
Time to slip into a short break. On the other side, we go full tilt on stocks that we're looking at for today's top 10. HDFC Life, ICICI Pru Life, SBI Life, Sri Digvijay Cement, Saman Capital, Aptus Value Holding Finance, Zydus Life, Aarti Drugs, and Bharat Forge. All of them will be reacting to positive news flow, while we have Biocon that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.